Hello and welcome back to the channel, where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're putting a specific company under the microscope, one that's been lighting up our hard-to-borrow screener with some truly eye-popping numbers. We're talking about VRAX Biolabs Group Limited, trading under the ticker VRAX. But before we get into the details, a crucial word, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on VRAX. VRAX Biolabs Group Limited is a biotechnology company focused on crucial areas like immune response detection, T-cell immune profiling, and developing in vitro diagnostic technologies for viral and immune-mediated diseases. They operate in key global markets including the United Kingdom, the United States, and China. With the current market capitalization hovering around $2.06 million, VRAX falls squarely into the microcap biotechnology sector. Looking at recent price action, it's been a tough ride for VRAX shareholders. Today, the stock is down 11.81%. Over the last 5 days, it's seen a decline of 15.30%, and looking at the past 30 days, VRAX has dropped 27.46%. Volume-wise, today saw only 145,119 shares traded, which is a tiny fraction of its 30-day average volume of over 3 million shares. Why is cost to borrow and why it matters? Now let's talk about the core of our discussion, the cost to borrow, or CTB. When you short a stock, you're borrowing shares from a broker and selling them, hoping to buy them back later at a lower price for profit. But borrowing isn't free. You pay a fee expressed as an annualized percentage. The higher this fee, the more expensive it is to hold a short position. When a stock becomes hard to borrow, it means there's limited supply of shares available to short. This scarcity drives up the cost to borrow, sometimes to astronomical levels. Why this stock is hard to borrow right now? And astronomical is exactly what we're seeing with VRAX. Our screener shows an annualized cost to borrow fee of an astonishing 680.2%. Highlight 680.2%, put that in perspective, short sellers betting against VRAX Biolabs are paying nearly double the stock's value every year just to maintain their position. This is an incredibly high fee, indicating extreme scarcity of shares for shorting. VRAX has an estimated float of just 0.8 million shares, which is a very small number. A small float, coupled with high demand from short sellers, is what drives these borrow fees sky high. Our internal composite squeeze score for VRAX is currently 41.7 out of 100, reflecting this elevated CTB and limited float, among other factors. Squeeze mechanics explained. So, what does this all mean for potential short squeeze? A short squeeze occurs when the price of a heavily shorted stock begins to rise. As the price goes up, short sellers, especially those paying high borrow fees like for VRAX, face increasing pressure. They risk unlimited losses if the stock keeps climbing. To limit their losses, or just to stop paying those crippling borrow fees, they start to buy back the shares they borrowed. This buying activity, known as short covering, adds to the buying pressure, pushing the stock price even higher, which in turn forces more short sellers to cover. It creates a self-reinforcing upward spiral, or a squeeze. Dilution risk check. While a high cost to borrow is a key ingredient for a potential squeeze, we always need to check for dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically dilutes the value of existing shares and can completely offset or negate any short squeeze potential, even with high borrow fees, because the new shares can be used by short sellers to cover their positions or just add selling pressure. In the case of VRAX, we found no recent dilutive SEC filings like -1s, -3s, or 424Bs in the last 90 days, which is a positive sign for the short squeeze thesis, as it suggests no immediate major influx of new shares is on the horizon from the company itself. Recent reverse split watch. Now, something crucial to consider for VRAX Biolabs Group Limited is its recent reverse stock split. VRAX executed a 1:25 reverse stock split on June 26, 2026, which was just 27 days ago. A reverse split reduces the number of outstanding shares and proportionally increases the share price. For VRAX, this meant 25 old shares became 1 new share. While it resets the share price higher, it also drastically reduces the float. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the market digests the new share structure and reduced float. It's a pattern we've observed in some names, not a guarantee, but it certainly adds another layer of interest to VRAX right now, especially with its already tight float and high CTB. Again, let me reiterate an important disclaimer here. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions, as performance does not guarantee future results. For VRAX, the combination of an extremely high 680.2% cost to borrow and a tiny estimated float of 0.8 million shares certainly makes it an interesting candidate for a hard-to-borrow watch list. Add to that the recent reverse split and the historical tendency for microcaps to react in the month following. However, it's vital to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have strong conviction in their bearish bet and are willing to pay significant fees to stay short, believing the stock will continue to decline. The current negative price momentum and extremely low daily volume for VRAX suggest that buying pressure is currently absent, despite the high CTB. We'll be watching for any sudden increase in volume coupled with price appreciation, which could signal short covering. VRAX Biolabs Group Limited, or VRAX, presents a fascinating case study in the hard-to-borrow world with its staggering 680.2% CTB and tight float, especially after its recent reverse split. It's a situation ripe for observation, but always remember the inherent risks of trading microcap biotech stocks. If you found this deep dive into VRAX insightful, please hit that like button, subscribe to the channel for more unique insights, and let us know in the comments what other hard-to-borrow stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next one.